What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So this was a positive week overall in markets. I'd like to attribute this to the fact that no banks have blown up this week. Things seems to now be under control, at least for now. Also, the PCE, which is another measure for inflation and actually the Fed preferred measure, rose less than expected. Expectation was for 0.4%, but it came in at 0.3 instead, meaning that inflation is continuing to ease. That's what we like to see. Now, all three major indices rose by a little over 3%. Meanwhile, Tesla posted a solid 8.95% gain. In case people forget, Tesla kicked off the year by dropping as low as $101. If you had bought into the fear, you are now up over 100% on those shares. Definitely patting myself on the back for that one, and congratulations to all of you who bought as well. This is the Tesla stock best Q1 performance in its entire history as a publicly traded company. And so the natural question that comes to mind is, have all the gains been gotten? So in today's video, I'll go over what Tesla has been up to and what's behind the stock performance. We'll check on the overall sentiment around the stock from analysts and close with what I'm personally doing. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Okay, so Tesla achieved a key milestone this week and is on pace for what could very well be another record quarter and a very strong start to 2023. Tesla has been ramping up two new factories, Giga Texas here in the US and Giga Berlin in Europe. Both factories opened up originally in late 2021 with the expectation to achieve volume production by the end of 2022. That's 5,000 units per week per Tesla standard. However, both factories closed the year with a production rate of 3,000 units per week. Now, a few days ago, Tesla announced that they have achieved the golden milestone of 5,000 units per week for Giga Berlin. To put things into perspective and why this matters, Tesla has a bigger production capacity for long-range electric vehicles at Gigafactory Berlin than most legacy automakers have overall. They're literally playing on a different playing field, right? Given the accomplishment, what better time to release their Giga beer? This is an exclusive limited 3-pack Tesla branded beer. The bottle shape is inspired by the Cybertruck and only available to the European market. Yours truly was able to secure a pack nonetheless. Shout out to my niece and nephew in Paris for waking up mom in the middle of the night to ensure Uncle Tevi got the hookup. Thank you. But it's not just in Europe that Tesla is executing. For the second month in a row, the Model Y took second best-selling SUV in China with 25,526 units in February. This is a 37.3% increase on a year-over-year basis. The price cut enacted in China that initially generated a massive amount of FUD and contributed to the stock price crash are now being touted, you guessed it, as a genius marketing move as people realize that Tesla does not have a demand problem, and not only that, despite cutting prices, they can maintain reasonable and industry-leading profit margins at 20% or above. All this has set up Tesla for what should be a record quarter and probably one of their strongest Q1 performance to date on a relative basis. I'm expecting delivery numbers to drop as I record, so we'll work those in if I get them. Next week should be an exciting one. Tesla is expected to unveil a new product for the Chinese market. Though not confirmed, it is expected to be related to their next-gen supercharger, the V4 platform. This would make sense as Tesla continues to expand their supercharging network and are now positioning to open up charging to non-Tesla users. Those efforts are already underway in the US and Europe. Keep an eye out on my Twitter account as I will more than likely post an update there as soon as the unveiling is complete. So on to the question of, have all the gains been made? Let's start by taking a look at the technicals. You can see here that after our last big move to $214, we crossed into the overbought zone with RSI at 73.22. The stock then went into cool-off mode, but what you want to pay attention to here is the fact that since going past the 50-day moving average, Tesla hasn't fallen back under, but instead has successfully used the band as support as it climbs steadily higher and higher. As of Friday's market close at $207 and some change, the RSI now stands at 63.33, while the 200-day moving average, our next area of resistance, is at $215.70. Essentially, between the new product announcement and likely record deliveries to be announced sometimes today, those two catalysts should help push us up to or past the 200-day wall. The interesting thing is the 200-day moving average price is virtually identical to the median price target assigned by analysts. This number stands at $215.43, which is good for at least another 3.83% gain. Tesla currently has a consensus rating of a moderate buy with 20 buy ratings, 7 hold, and 3 sell ratings. Another fun fact is that ratings have not changed, but the median price target moved up significantly in the last few weeks from being previously at $191.37. The top end of the range remains at $300 and the low end of the spectrum at $85. So to answer the question, Tesla has more gains to be had both in the near term and long term, so long as delivery numbers do not disappoint. That said, we are approaching the overbought zone. A full retracement in my mind isn't likely, but seeing the stock pull back some after challenging the 200-day would be appropriate here. Simply don't expect any massive retracement back to $150 or below. And just as I say that, delivery numbers are now out. This is breaking news. Here are the numbers. Delivery came in at a record high of 422,875. Wall Street expectations were for 421K. Tesla once again going above and beyond expectations. Total production numbers came in at 440,808 units. The Q1 earnings call date was also released. That is set now for April 19th at 4:30 p.m. Central Time or 5:30 p.m. Eastern Time. And actually, I will revise my earlier statement and say that with these delivery numbers and the earning date announcement, this stock is most definitely moving higher next week. So that's what I'm going with. That, of course, brings us to what I am personally doing. I have not bought or sold any additional shares since my last video. There is no doubt in my mind that Tesla will hit the top end of the price target range at $300 over the course of the next 12 months. That would represent a 50% gain from current level. So again, you have not missed out on all of the gains just yet. Now, seeing that I have already achieved my initial share count target, I have not been in as big of a rush to buy any more shares. In my opinion, there will more than likely be better buying opportunities and possibly lower entry points closer to the 50-day moving average once the excitement dies down. Should you decide to buy here, I would recommend taking a DCA approach if you're going long. But if you're looking for a quick flip, I'd sell whatever you pick up into the earning call hype 2 weeks from now, okay? The last thing I will say is this. My final thoughts are not that much different than the last time I covered Tesla. The catalysts based on Tesla's performance are plentiful in the near, mid, and long term. Tesla is aiming to achieve 20 million vehicles produced and sold in 2030. Today, they have nearly an installed capacity of 2 million units per year. This is before the Cybertruck, Roadster, and Semi achieving volume production, and before the introduction of Robotaxi and other planned models. They're basically at 10% of the desired end goal. The growth Tesla will experience during the remainder of this decade will be exponential. I mean, look at this chart. This is what exponential growth looks like, and it's only going to accelerate. This will translate to increased revenue, and it will no doubt be reflected in the stock price. If there ever was a stock that I feel comfortable buying with my eyes closed and holding, well, Tesla is it. If there is a decent pullback and I have the funds, I'll definitely be buying more. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe, it's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.